By right. It's been a minute since I've done one of these, but I have addressed some issues that I had with my trading, some stuff I wasn't happy with, and I found a consistent model that I'm working on right now. And today, I really liked, I just really liked how it played out. I mean, I think it plays out really well most days. But today was a particularly difficult 9:30 open. Oh, Jesus, sorry. I'm trying to adjust my chair. I have a focus on the 9:30 open generally. That's what I prefer is to be done after 9:30 open. Get a strong move, get my money, and get out, right? 9:30 open today was difficult. However, I performed well. Didn't hold my trade, so I didn't profit as well as I could have. But I just wanted to take some time to break it down because I think it would be really helpful for others that are struggling with order blocks. That's the thing that I'm really focusing on lately since mid last month. So I'm still working on it, still trying to get my confidence with them. But I'm pretty proud with how I'm seeing them and how I'm applying them. You just got to keep refining that to make more money. So I'm going to start off with the daily chart to just sort of get our mindset coming into the day, right? So Friday, as you saw, this was NFP, non-firm payrolls, had a dip down and it really expanded up and got us out of the range that NQ was in. And I'm going to be looking at MNQ just because that's what I trade. It should pretty much correlate to NQ. So it might be, a tick or two different, but it pretty much matches up. Got us out of this consolidation range on the daily, right? That we were in for a couple weeks. So NFP really broke us out. And the first thing I was looking at there, now you don't see ES, but let me jump to ES. And you'll see the ES structure looks much different. Now this is ES continuous contract, so it's a little different than the NQZ, the MNQZ that I was on, but this is the same on ESZ versus ES continuous contract, which that's what this is, ES exclamation point. You notice here that ES did take this low, while if we go back to MNQ, it did not. It actually, I think, barely missed it, or yeah, it barely missed it, right? So if you look at the low on this candle, it's 14587.25. Low on this candle is 14589.25. So it was two handles above, right? So it missed sweeping this. So we had an SMT divergence on the daily chart. That's important because typically when you see something like this is a consolidation from a an expansion bearish, you would not trust a move upwards from this range, because a consolidation typically does not go into a reversal straight from the consolidation. Any reversal would tend to be a fake pump, and it gets sent back down through the range to create a continuation down. Since ES had SMT divergence, we can sort of throw that out, right? So that's one thing I was thinking about, to trust this move more than I typically would have. Monday led us to further trust this move by it going into, and let's talk about order block theory. So this did not sweep the low, but since ES did, let's treat this like it did sweep the low, right? If this did sweep the low, and then we had a push up, and this is, let's say, a 5-minute chart, what would we do when this candle breaks up and closes over the range? We would consider this candle here to be an order block, right? And since it's a really big fat candle, we could really just focus on the body. So this is a bullish order block. It did not sweep the low, so order block theory, I believe, would say this isn't. However, we did sweep a low here. We did not sweep this one. This is where SMT divergence is important, because we can treat this, and I guess it really doesn't matter. You could treat this one as the order block as well, since this is what swept the liquidity. That is a key with the order blocks, and having them be very impactful, right? Is that they are the last down close candle. A bullish order block would be the last down close candle in the series, or series of down close candles, in the series that swept the liquidity, right? So we could take that. That's fine too. This one aligns as well. Either one works. And you can see that Monday did tap into that bullish order block and really took off like a rocket, right? Which is exactly what we would want to expect. The SMT divergence in me wants to say that this order block, remember, ES had this sort of down here because it had swept these lows, and Q did not. So you want to sort of treat this like kind of like a propulsion block, right? Which we did propel, and I think it's really hard to say where this will end, but there are some targets up. We have some buy side liquidity here to tap into this fair value gap. We also have some clean highs here if it's really ambitious, and this is kind of a scuffed looking market maker model, right? It's not really a market maker model in the daily chart, but we're gonna drop into the hourly chart here in a second. So coming into Tuesday, we had Monday continue this rise up after dipping into the bullish order block on the daily. We had it take previous week high, and we had a previous day high of Monday taken overnight in today's action. There's another thing here. There is this fair value gap right here. So when looking at the week, the first thing I did was take this range and said, where's premium and discount? Now, ironically, premium and discount, the premium discount line is right here, right? So my first target for the week was this fair value gap here, which was just into the discount or the premium line, right? The PD line, which would send us into premium. So that's first target. Now we're continuing to rise up, and we did get into an OTE of this drop, right? So the question is, do we continue up? I'm not 100% sure, but with the SMT divergence, I think it could be possible. And the next thing I would be looking for is to come up into this fair value gap, and then the last thing would be this, right? So that's just a little bit of a recap of like where we were heading into the day and my thought process there. So my first target for today was the top of the fair value gap. Initially it wasn't, right? I had hit my first target of the bottom of the fair value gap. And if we look at the hourly chart, the day started, this was the overnight, right? Had a little bit more of a push up. Did not get to the top of the gap. Came pretty close, but then put in this strong downward candle here, right? So my initial thought when I got to the computer this morning was that this is a shift down, and we were to go maybe back into OTE of this, potentially back down to order block, new week opening gap here, right? We have that as well. But another thing that was in my mind on the hourly chart is this sort of kind of market maker model structure. It's pretty messy, so I'm not like very like super confident in it. But we did come into some structure here, and this could potentially come and clear out all of this range, right? Like there's some low resistance liquidity up here. These highs, 1, 2, 3, 4 different peaks there. Then of course we have more up here, but yeah. So the initial thought was still down, right? When I took to the charts this morning, and I feel like it was a pretty much the sentiment online. Like everyone that I heard talking was like, yeah, it's going down, right? It made sense until it didn't. And that's what I want to go through. That's the main thing I want to go through, is how do you know it didn't make sense, right? So we look at a 5-minute chart. That's where I like to figure out where the morning is going. And like I said at the beginning of this stream, this was a difficult start of the day. You know, for more upside, you might have wanted to see the overnight action come and take like these lows, right? At the very least, maybe these lows, potentially come all the way back into here and maybe tap into an order block and then start a little shift. Obviously it didn't. It, if anything, went up a little bit. but stayed relatively the same. Now you see it flirted around the previous day high. And we're going to go into this structure here and how we can identify when we are bullish and when we're bearish. So these are session kill zone highs and lows, right? So this is very important because the first thing that London did, London kill zone started and it took Asia lows and then it took Asia highs, right? It did not go any further than that. And it's a difficult thing to know what's going to happen, especially taking Asia highs. You would think that maybe New York would be a continuation of this downward move after taking the highs. So yeah, that was still in my head. That was still definitely in my head. And this is something, it took me a little bit to get used to being able to see this, but really focus in on this bit of structure here and tell me, like, what do you see, right? Lots of wicks, lots of choppiness. Some people might say, oh, this is a barcode. You have no idea. This is consolidation. You have no idea where it's going to go, right? There's a couple hints. So first off, liquidity sweeping candles here, right? So this set of candles, this was just before 7:30. Took London lows. Now, one thing that I try to look for is a liquidity sweeping candle. If it's not a close, this is pretty close, but especially when we're like before an open, a couple hours before an open, what I really like to see is a resweep of that liquidity, right? So we have two strong bearish candles, two strong bullish candles, then four strong bearish candles resweeping the liquidity. And then from this point on, there are a couple things that are important. So this would be our order block, correct? This is our resweeping candle. So does that look, that looks a lot better, huh? That makes the picture a lot more clear, in my opinion. So after this resweep, we push up. We immediately push up. Now retail will call this an engulfing candle, yeah? Engulfing candles, like, it can happen like this. Sometimes it does. I don't really care that it's an engulfing candle. It can happen 5, 6, 10 candles later. The important part is the last down close candle in the series that swept the liquidity creates our first high probability order block, right? So we close above it, confirming this order block. And then from that point on, basically what you want to look for, it depends on the candle, and this one's a little iffy because there's a big wick, but it does have a nice solid body. What you want to look for is the mean threshold, which is the center of the body for this one. You don't want any candle close below that. You can have the pokes into it, as you see here. We poke down in it, but we do not close cross that line. There's another thing that happens. the first bearish candle that comes down in here, as soon as it gets closed over, right? So that's 8:30. At the 8:30 candle, we have confirmed this as a potential order block as well. So what we want to do is the same kind of action. Use whole candle. Actually, I usually use whole candle, but when it has a big wick, sometimes I only like that. So we use whole candle. And this one, it's not like as big of a deal for me. It was just a neat little confluence that I saw that had, that gave me more confidence in the move, right? So you have that. And one thing that you will notice in this whole series, once we've confirmed that we are in this buy program, right? Like that's what a lot of people will say, that dipping into this liquidity here, right? All of the stuff underneath that. So like all of this, I guess you could like carry it over here, right? I honestly think it's more of just this. Like once we've gone in and out of that, let's put BPR. It's similar kind of concept of a BPR. That is like activating the buy program. So once a buy program has been activated, then what can we see to confirm that? Well, we should see that all down close candles that are confirmed are not violated, right? All down close candles after that. So we take the liquidity, this being the first one, the highest. This is the strongest one, the first one. It is never closed through the mean threshold. And definitely never closed under. We also never close under a bullish candle, right? Closing under a bullish candle would give us a potential minus OB, right? It would give us a reason to be skeptical. And once our liquidity is swept and the buy program has been activated, we do not create any new bearish order blocks ever, right? Look at all these wicks. It never closes under a wick of a, oh, sorry, I lied right here. We do close under this one. So it is a difficult thing, but the main thing you want to look for are these mean thresholds. And really, this is the key one here. This is just a cool confluence. Now, if you want to go for, usually I'm waiting for 9:30. Try to be patient and like wait for even more confirmation. So 9:40 was my real confirmation candle that we were definitely going up, right? So ICT, when he talks about order blocks, he usually talks about the whole range. Now, this one last order block, this is like very early entry, right? You would like to see this hold if we're going up. And I think it's appropriate to be able to trust that. to try to see that hold. Because if it doesn't, I mean, yeah, you could get stopped out. It should be a very small stop. But waiting for confirmation of this whole order block, I mean, it could leave you in a spot where there's really not any time to get in. Luckily today, there was. So if you did wait until the first candle that confirmed the entire order block, that would be this 940 candle. All right, so we have a plus OB. A lot of times what I'll do while this is barcoding and doing stuff like that, I'll mark this out. And the next order block that I want to see confirmed, so like this whole one, I'll put the line on there and I'll say potential plus OB, right? I'm just waiting for the confirmation of that full order block. I was actually looking at, so you also want to look for any liquidity, liquidity sweeping candles in this range as well. Like we have this one, sorry, liquidity sweeping this way. So you have this one, you have not that one, this one, right? So you could wait till 950 where that one's confirmed, and it did come back and tap into that too. So there's many opportunities to get into a trade trying to use these order blocks, right? This one, like I mentioned a bunch of times, is particularly difficult. So I would really, if you're trying to use this theory, stick with, you can sort of ignore all this noise and stick with this. You could potentially have, if you're going for earliest entry, you could have gotten in right here at 805, and this never gets disrespected. Like I said, I got in at 940. I did not hold my trade very long. I'm still trying to get comfortable with that, so ended up taking a small gain at a small loss in this mess too. So basically it was like break even at that point. So still working on it, but I thought it was pretty cool seeing it and watching it play out, and I really just wanted to talk about it tonight. So this candle close over this entire range, tap back into it. It basically immediately does, right? I think it hit this and it ran up, right? Closed, ran up a little bit, came back down. Any of that, I mean, you could take any of that, tap into under this line as an entry. And then you see here throughout the morning, you basically can just use the same order block theory the entire morning and take this whole thing up, right? It never violates a bullish order block again until the afternoon, until lunchtime. So you see this. When do we close over? So let's just take the body. It doesn't really matter. It's going to work the same. When do we close over? Right here. Taps back in. That's an entry. You could take that, right? Never once, when an order block is confirmed, does it come back in and break the mean threshold, right? Okay, so we have this little dinky one, or we would wait for and this one is pretty pathetic, but you have another one here. Both of these, it doesn't confirm until this candle. So let's say you take this one. I would probably, if I were gonna get in, I mean, I wouldn't be in all the way up here, but in theory, you could take that as an order block. As soon as this closes, we come back into it, we come back in again, These are both entries. We would never close under the mean threshold, so we take it up even further. Every time. Down close candles, confirmed, tap. Down close candle, confirm, tap. Down close candle, confirm, break, right? So right here, this candle, if you were just gonna go and enter based on order block theory and exit based on the invalidation using order block theory, you would have gotten to the close of this candle. Okay, 11:55. You would have been able to enter at 8:05 at, let's say, 15183.50 and exit at 11:55 at the close of this 372.25. I have a handy dandy calculator that I use. So let's pull that up. Where's it at? Documents, futures calc. Let's pull this sucker up. All right, so I'm gonna go with my standard lot size, which is 3 M&Q. I go real light. Real light. This is like under a 1/4% risk. So let's use these numbers again, right? 15183.50. We're talking about the first entry and the first invalidation. 15183.5. Yeah. Our exit is on the close of this candle. That's the first time we have disrespected an order block. 15372.25. That is a potential profit of $1,132.50 on 3 micro lots. Okay. That is insane. The risk of that, right? You want to talk how many R? What's our R, right? So if you were to enter down here, you enter right when it taps back in, stop loss would be the low of this candle. So 15173 even. The potential loss is $63. $63. You risk $63. And if you just follow order block theory to invalidation, let me make sure it's not even invalidation of that. Oh, sorry. Let's go with this one just to make it a little more fair, because I would say that's probably not invalidation because it's not mean threshold. I was just looking at the body only. Invalidation would be here. Close 1536625. So let's adjust our thing. 153.6. What was it? 26. 1536625. 66.25. Okay, so potential profit of $1,096.50 with a potential loss of $63. All right. So what's our R? Risk over reward, right? So equals, I'll show you guys this in a second. So that's 17.4 R. With 3 M and Q. Oh shit, you guys can't see it. I don't have the source on. You're gonna just have to trust me on this, okay? So entry is 1518350, as we see from here, as soon as we tap into this bullish order block from this morning's action. Our take profit is invalidation of the order block, which is up here, this candle. And our stop loss would be at the low from this. So a little 17.4 R trade, $1,000 potential profit on 3 M and Q. All right. But wait, there's more. Okay. So what happens when we violate the mean threshold of this? Well, we've just swept liquidity, it's really external liquidity, but it's liquidity from the push up, right? Now, if we wanted to look at why we stopped here, we'd probably want to look at an hourly chart. We actually stopped shy of sweeping some liquidity here. So it's really just an order block that we tapped into. Yeah. It's honestly rather strange. I was not expecting the move to end there. It was quite strange that it stopped there, but that's not what we really care about. What do we care about? We care about the order block theory. All right. So that candle there, that invalidated this run up. So we're done, right? We're done with the buy program at this point. We're going to move on to the sell program that has kicked in, because it has kicked in, right? So what do we want to look at with this? Well, last up close candle is now our minus OB, our bearish order block. And we want to look at probably the full candle here, but we'll take body as well. I think it works either way. Yep. This candle doesn't have a long wick. I would probably take full candle. Let's just take full candle. Okay. And you can see what's happened there as well, right? So this is a potential short entry. I didn't actually take this. I was out on a run, which I generally do over lunchtime, because there's generally not great setups like this on lunch. So it's fine to miss one. No big deal. But there's other confirmation here. What do we then look for after? So we've confirmed the order block as of noon. Exactly at noon is when this order block was confirmed. Tap back in. We are not disrespecting. We are never closing above a down close candle either, which is going to create a bullish order block, right? Do we ever close above? We close above this one, but it's the series. So yeah, there's other stuff we could look at, right? We close under this series, so that's another like order block there. Tap back in. That one's never disrespected after that point, right? After this point. Is it disrespected? It's sorta, kinda. It's a little iffy. I would really take probably this candle, but because this would be the liquidity sweeping one. But this one's a little weird. It doesn't really matter because it's, if you take the last one too, the theory really is the last one. You can see there, it doesn't disrespect it either. When do we close under this one? This one is where it gets a little sloppy, right? Because we do close under here, and we go back up into this order block. That's why it's hard when you're in a range like this to really care about and confirm these quote unquote order blocks, especially when they're not really sweeping any new liquidity. So that's really the biggest thing to look for, is the sweeping of liquidity, right? This one, we had a down close candle, and then we swept the swing high, right? So sweeping the swing high creates a very strong order block when we've confirmed it. And you can see here many taps into it before we hit this huge sell-off. So this range was tough, but at this point the day's over, right? I did try to take a short in this range, and I can show you exactly the one I tried to take a short off of, and it was this one. As soon as this closed under the 14:05, which is 2:05 p.m. Eastern time, you can see there that all we have are wicks up above that. So I was expecting at this point, I guess not expecting, but I was anticipating a potential second leg of this distribution to maybe come up and clean up this stuff, or at least sweep this swing low, dip into this fair value gap, but it ended up not happening, which is fine. Yeah, that's the order block theory. On this trade, we can do the same exercise as this one. When did we see confirmation and violation, right? So our entry, our confirmation would have come in. We tap into the low of this, which would be 15370. Our take profit would be whenever we violated the downward move. Violating the downward move would mean closing over an up close candle series, right? The mean threshold, sorry. Closing over the mean threshold of an up close candle series. So I think it would be right here. Closing under would be there for that down close candle. So the opposite way, closing over an up close candle series. You would be really here, I guess, when this didn't push further down, right? That was another thing I was looking for. I wanted to see if it could potentially sweep again and then put up some bullish pattern to go back up. But I mean, we just didn't have much time left, I guess, in the day to do all that noise. And there was no news drivers, so why would it do that, right? So we really just got one straight shot. There was not even an order block in here. The first order block that it created was violated immediately. So we'll go with the close of this, 15290.75. 15290.75. So that's $475 on a 3 MNQ trade. Pretty good. Pretty good. Once again, let's look at our stop loss too. what would our stop loss be? It would be this high being 15383.50. So that would be a potential loss of $81. This is a 5.8 R trade. That's 2 5-minute order block based trades with insane risk to reward if you just follow order block theory and stick to your trade. This is mainly me telling myself to stop being an idiot and closing your fucking trades, man. I have a really bad habit of doing that, and I think most days it comes back to bite me, where I don't take my profits. I don't take the potential profits that I could have had. And I end up, I got in on this one and it just fluttered around and didn't do much with that short. Yeah, so that was the day. I thought it was a particularly nice day to have a lesson, so that's why I've done this stream. I know it's been a while. I definitely want to do streams like this, especially for myself, to give myself some encouragement. But when there are days that are a little more challenging to see and order blocks clear it up, I think this was a really beautiful setup, right? Like, look at this. Bullish order block confirmed. Tough trading. Don't get chopped up. But if you want extra confirmation, you wait for the whole range. You could get in right here and you could be off to the races. And if you just let it go until the order block theory is invalidated, you'd be taking it all the way up. And same for the drop. So, yeah, I hope you enjoyed this quick recap stream. Like I said, I'll try to do this more often when there's something cool to see. I'm focusing strictly on 5-minute order blocks right now. I really think this is the best, at least for me, the best strategy to feel confident, for confirmation of where we're going, to clear up the muddiness, right? I mean, you look at this, it's hard to really get a good picture of what's going on. And if you're wondering if I actually took this live, I did take it live. I just didn't freaking profit on it like I wanted to. I have a video of it. I'm debating whether I'm gonna put it up or not. I've been putting up videos here and there, but it is a lot of work. I'm not very good at doing the editing part. It takes me a little bit of time. And yeah, I mean, if I would have held my trade like I should have, I probably would put it up. But I'm just going to keep it for my journaling. Most likely just keep it for my journaling. I take these videos every day of any trades that I enter, and I keep it to reflect on later. It's my version of journaling, my lazy, don't want to write shit version of journaling. So yeah, thanks for hanging out. I hope you enjoyed going over these order blocks. If you ever are curious about the order blocks, feel free to send me a DM on Twitter, on Discord. I would be happy to help you try to learn this theory. As always, I'm a student. I'm still trying to figure this stuff out. I've been at it for a long time. So don't take what I say is gospel. I'm learning from ICT. I'm also learning from a guy named T-Trades. It's really good. And I'm learning from a couple other traders, AM Trades, MMXM Trader. They're both they're all pretty influential to me. So if you're curious about them, feel free to look them up as well because they are very good. ICT is the foundation. If you haven't been watching his stuff, taking his mentorships, go do it. Like, it's the only way to feel confident about price action, in my opinion. Anyway, have a great night. See you tomorrow, hopefully, maybe. See you next time.